It's a critical warning. I'm your host, Steve Metre, and thanks for joining me today. In our lead story today, Bank of America issues a critical warning. All account holders are at risk. We'll show you what the big bank says this risk is and what you can do right now to mitigate it in the show that makes you money, which is why every Sunday we like to look at the technicals, momentum, and machine positioning to make you a better trader and investor. We give you the tools. You just have to push the buttons. And plus, we'd like to welcome our sponsor of today's show, Aethlon Medical. You can find them on the NASDAQ on the symbol AEMD, and they develop novel immunotherapies to combat cancer and life-threatening viral infections. And the reason you want to check them out is because they just released positive results on their Hemopurifier, their flagship product, and you can be buying their stock right where the big players are. I'm going to show you this and how the stock could move up as much as 37%. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's go to Bloomberg, where he picked today's story up with a headline as B of A says drop in U.S. tech could be the next pain trade for equities. This warning now to all account holders as the outperformance of value over growth stocks as market breadth improves could be the next pain trade for investors. This from strategist Michael Hartnett and Elias Galou wrote in a recent note. Other potential sore points on the horizon include a drop in U.S. equities and a widening in investment-grade bond spreads. And here you can see the S&P 500 relative to the equal weight index is near levels last seen in 2009. And as the economy slows down and stocks continue to rise, this is setting up what could be a massive crash, which is why, of course, Bank of America is warning. Meanwhile, the S&P 500 value index is up less than 4% this year compared to a 15% rally in its growth counterpart. The S&P 500 equal weighted index, which dilutes the impact of the tech mega caps, is trading at the lowest level since 2009 relative to the benchmark, suggesting that pain is indeed coming. And this is echoed by Goldman as we now turn to start looking at the machine positioning, as they suggest here that no change in trading views as technical supply eases. But look at this, what you're seeing here from an index return, the 495 companies are actually generating a very low return relative to the broad index, with most of it being in Amazon, Apple, Microsoft, Google, and Nvidia, suggesting that investors are crammed into 5 stocks now as market breadth starts to weaken. This is what Bank of America is warning about. Those top 5 can't go on their own forever, as the Milliman Top 100 Pension Plan funded status is now sitting at 104%. What this means is pensions are now going to be looking to buy fixed income and not stocks as they immunize and deglide. This is going to happen going forward from here as they look to de-risk, taking a buyer away from the equity market. And this leaves perhaps one of the biggest and only buyers left, and that is corporates, who are now purchasing, can you believe this, the second largest in record, $657 billion. That was in 2022. This year, $608 billion has been authorized, and right now 90% of authorizations are being executed, and this is massive. But despite all the buyers, we're still seeing a big shift in momentum in the market. We'll take a look at that in a moment. Keep in mind, mark your calendars, on the 14th of this month, we head back into the blackout window. And look at this, in generals we trust, the largest 5 companies, the Fab 5, has never been more concentrated, meaning when you put $1 into the S&P 500 SPY ETF, 27 cents goes into 5 companies. And something we look to put some trust is a sponsor of today's show, Aethlon Medical. You can find them on the NASDAQ on the symbol AEMD. We talk about momentum. Look at the RSI here. It's coming off oversold territory. Look at the MACD. It's bottoming out, making a positive cross, and you can see this volume profile. We'll look at this deeper later in the show. This is where the buyers are stepping in after a big drop based on some recent news, setting up what we think is a 37% move to the upside. And look at this, when you have alternatives to the market, that's what makes Aethlon Medical interesting here, because you see the market cap of the largest stock relative to the 75th percentile. Well, you're talking new records here. And what we know throughout history, when those things happen, eventually stocks start to come down. And one thing that could be a big seller coming in the future, of course, that's machines. Now we take a look at the CTAs. If you're not familiar with these are price level machines that trade based on momentum. They move hundreds of billions of dollars. And looking at Goldman, what we see from the machines is they are capped out to the long side over the next week, over the next month. They're only minor buyers here and adding virtually no support to the market, suggesting that, again, everybody is all in along this market as we're now 2 weeks from the blackout window. Now let's take a look at our own screens, because we look at machine positioning too every day for our subscribers, but we do something different. We run a historical overlay. So let's take a look at the SPY. We have a fast algorithm and a slow algorithm, the mimic machines, and what we're seeing is we are long too on a historical basis, but we're starting to see some move down here on our fast algorithm, suggesting it's weeks to come. The big machines will be off sides, but we know momentum is still positive on the S&P here. The relative strength index, while it's slowing, it's still above 40. It's at 58. The MACD just pulled a negative cross, but the moving average convergence divergence, for those who trade it, they know that it gets out way too early and often it gives false signals, which is why you have to aggregate them together with other signals, which is what we do in our Momentum Timer Pro. There's 20 consecutive daily buy signals on the S&P 500, and we run a daily momentum screen, a 1, 3, and 6 month screen, and it is maxed out to the long side. But we put on a buy it open based on our pair reports. If you were watching back in April, buy it open on 508.56. We got stopped out on Friday for a 2.17% gain, and this is something that everybody can do, is start putting on some stop losses to protect your downside. Start looking to maybe take some risk off over the next couple weeks, because if what Bank of America is suggesting with market breadth is likely to happen, then it could be a big downside move in stocks, particularly when we hit the blackout window. Let's take a look. The upside target 533, downside target 50-day moving average. Look at the charts here, because I want you to see, despite all of these near record corporate share buybacks, everybody's in. The machines are in, the vol control strategies are in, the risk parity strategies are in, retail's in, institutional is in. And notably, look at this. Here we see on the 30-day chart, what do you know? The volume profile. This is where the most shares have been traded over the last 30 days, is right here at the top. It's not a function of a lack of buyers from corporate. What it tells you is that there's not enough buyers to keep pushing prices higher. That means momentum and breadth is starting to weaken. And when you lose, of course, all your lieutenants, that means the generals at some point follow them lower. And now you can see the total risk to this market becomes to the downside, which is why we're putting our next downside target at the 100-day moving average. Right now, it's running into the 9-day upside target, remains back to the all-time highs. That right now, without any incremental buyers to come in beyond corporates, it doesn't look optimistic. We also got stopped out of our QQQ trade. Look, this is important. When you make money, raise your stop loss levels, put some return into your bank account, and look for other trades. That's why we run our reports, give you opportunities. And we're long on the machine positioning here, no change. But look at momentum, nearly maxed out across every single time horizon. We see the RSI slowing down at 56. MACD's got a negative cross, but our report, which aggregates a bunch of these signals and one proprietary one, has 20 consecutive daily buy signals. So momentum hasn't flipped. But again, we got stopped out for a nice 4.72% gain. Upside target back near the all-time high. Of course, downside target 50-day moving average. Let's take a look at the Qs here, because this is the same story. We zoom in here to the 30-day chart, and it isn't because these companies aren't buying back massive amounts of their stock. There just isn't enough money flow at the current level. And mind you, we're seeing $5.5 billion per day of corporate share buybacks, and because price is so high and there's no real other buyers, it isn't enough to continue to push prices up. That's why we're seeing momentum start to shift to the downside, why Bank of America is warning, why we're suggesting you start raising those stop loss levels, take some money off the table. You can always get back in. Let's take a look at the small caps. What do we see? The same story. Our machine positioning has been backing off the longs, telling us that on a historical basis, we're going to see the machines flip. and we're starting to see just a little hint of momentum slowing down with a couple sell signals last week. Now, you might remember we got stopped out more than a week ago on 523, made a nice 3.28% gain. And what's nice about it is we have really no worries because we made the money, put it in the account, and now looking for some other trades. That is one of the keys to being a trader, is not being in a hurry, waiting for your setups to show. And here you can see it broke through that 30-day volume profile, but mind you, you've seen sellers right above here. We zoom out to the 90-day window and you can see sellers are aggressively right above this. You look at a potential topping pattern. Here's a left shoulder ahead, a right shoulder forming. Potential breakdown of this suggests that you would see maybe a revisit down here to this 191 level, this upward supply zone. And this has been critical here. You note that it got up here and we were concerned. We're hoping to get to this high target over the last 6 months. Sellers are in this zone. They're sensing weakness in these small caps, and that's why we're seeing momentum continue to slow here. But not to worry, there are plenty of other opportunities. Take a look at this headline from today. OPEC plus voluntary cuts to be phased out from October, looking to extend them to 2025. This could play a nice short-term rally in the energy sector, but make sure you keep your stops tight on this one. Momentum has turned positive as of Friday. We see the RSI at 50. That's critical. It's still above 40 negative cross, but this is looking to make a positive cross, and we got the lead on that with our Momentum Timer Pro. Our machine positioning says there's some buying coming into the space. Let's take a look. Our upside target's the 50-day moving average. Now, mind you, I don't think there's a huge return. This is something I would keep your stop losses tight on. I think you're looking at a run to the 50-day, maybe up here around 94, with a possibility it gets up here to this 96 range. But notably, you're taking the stair-step move down. It got oversold. You see it down here, and the MACD is looking to make a positive cross. We didn't get to oversold on the RSI, but you see momentum trending. This headline's likely to move the tape, but keep in mind, when you see headlines like this, they're normally short-term in nature, so trade it accordingly. But there's your opportunity, potentially one of them, in the energy sector. Now let's take a look here at the bond market, because there's potential here. Now, this is one of those trades we didn't use stop losses, and we've done this to illustrate the value of using them. Now we're down 4.09%, but we use the tools to continue to dollar cost average in. Right now, momentum's negative. The RSI is at 49. MACD's got a negative cross. Our own Momentum Timer Pro, 3 consecutive daily sell signals, but there's an opportunity to see this switch because the machine's backed off. But one thing we do note here that's really important is the machines at all the investment banks are near max short levels, and what we're suggesting on a historical basis, they should be slightly long, which means when they come off of those short levels, and this is one of the things we show our subscribers, and they need to trade in. That's why we look at movements of price and when they're relatively short, to give you the lead, to trade ahead of the machines, to beat them at their own game. Let's take a look here at TLT, and I'll show you why there's potential opportunity. It's not because the 90-day volume profile is up here above. It's what's below, and that's the key, is you see some trade setups come in on the reports, and you're like, well, how do I know to trade them? You want to see where the buyers and sellers are at, and look at this. Over the last 30 days, buyers are very clearly right here. What happened is there was aggressive selling going into those bond auctions, came right down to where buyers wanted to buy, and they did, and now they're squeezing those short sellers up and out, creating a potential opportunity for you over the last 10 days. You can see maybe waiting for a close above the 10-day volume profile at 91.12, but opportunity maybe more so in the bond market than the equity market. Let's take a look at gold. I know a lot of people are bullish on it, but maybe from a trading perspective, that's changing. Momentum now negative, RSI cooling off, MACD headed negative. We got 3 daily sell signals on our Momentum Timer Pro. Upside target, potentially still the all-time high. Downside target, I think, is going to come into play at 210. Let's take a look at gold here, because you'll notice we got a top and then maybe what could be a second thrust or blow off up here. But notably, you continue to see sellers, and let's zoom in here to 90 days and look at this. Sellers all above here on a 90-day window. How about the 30-day chart? You see it again, sellers above. This is telling you people are capitalizing on the bullish sentiment of retail retail investors, and they're cashing in, leaving them to hold the bag, suggesting that our next downside target is down here right at the bottom of this candlestick at 210. That's the next move we're looking for to see. And yes, it does appear to be headed toward oversold territory, but right now it looks like a lot of people are out. But you could have made money trading gold, because look at this. Back on October 12th, we gave our subscribers both reports. We flagged a trade in that would be up 29% as of the close of May 20th. That would be the peak. You would have made almost $1,500 on total if you bought both reports and paid for the full year. But here's the best part: you get a free month to start out. Links in the description below. While you're there, check out Athlon Medical, and you would have been up a whopping $1,500 on a $550 annual report. How cool is that? How about GDX? Let's take a look here where gold goes. Miners follow. RSI's at 53, MACD negative cross. Momentum still overall positive, but we note that's probably going to shift because you look at the 1, 3, and 6 month almost extended at max levels here. Upside target is a recent high. Downside target still in play. We see the machine positioning starting to drop off here a little bit, which makes sense because on historical basis, things here are getting tight. It's looking toppish. We zoom in here, the 10-day window. What do you see? Sellers are now coming in above. Buyers are trying to fight below it. Still not a clear sign. Let's look at the 30-day window, and you see the battleground is right here, and that suggests, based on what we're looking with this triangle pattern here, you draw a line between the top, draw on the bottom, suggesting a move down here to that $33 range. Remember where gold goes, the miners go, but where the gold goes, you could have made even more money on the miners, because we flagged back in March a huge trade in on both our CTA and our Momentum Time Pro. You could be up big money. One trade pays for years worth of your reports. What are you waiting for? Because soybeans, another big potential opportunity. We got stopped out, and I think we'll see, wait for our reports to reverse on this trade, because I think this is going to be another opportunity. But here again, we made money and locked it in. That's the key. Take your profits and look for the next trade. Momentum now turning negative, again setting up what I think could be another beautiful entry point for soybeans. And let's take a look at the chart here. It's coming down. There's your volume profile, 25. If it breaks down to the supply zone down here at 20, around 24 and a half, if it gets down here and holds, well, you want to look to take another position. Why? Because that's where buyers are at. Sellers have been above. Nice setup here. As we know, momentum indeed slowing down on soybeans. But how about the dollar? The dollar has been the wrecking ball of the global economy. Here we see momentum still negative. We have one daily sell signal, but remember, back on May 6th, we took the opposite trade, the dollar bearish fund, now up 0.33%. Let's take a look at the dollar, because everything hinges on that. And we think that that's going to, again, give the global economy a major headache going forward. It has to find UUP. It's way down here now. And what you can see is sellers, again, looking at the last 10 days, they're duking it out right on the line. Looking at the last 30 days, duking it out. You're seeing people that had went long the dollar look to cash in. And something that we think you can cash in big on, well, that is the sponsor for today's show and their stock, Athlon Medical, on the NASDAQ, under symbol AEMD. And as I mentioned, they develop novel immunotherapies to combat cancer and life-threatening viral infections. You can find out more information in the pinned comment and the description below. And let's take a look at some of the recent highlights. They developed novel patented hemopurifier blood purification device. The FDA has designated the hemopurifier as a breakthrough device. Now, I want to tell you on a personal level, I do have blood disorders, and would be amazing to have access to a technology like hemopurifier, because if it can take out the stuff the doctors want out and leave in all the good stuff, well, it would make my treatments way easier. And that's what's exciting about what Athlon Medical is doing here. This is groundbreaking technology. They're focused on multiple therapeutic targets in cancer, viral disease, and organ transplantation. They've got U.S. and international clinical trials, a broad patent portfolio, and more importantly, an experienced management team leading the company. And here you can see they've safely administered 164 hemopurifier sessions in 38 patients. It's proprietary. It's patented. That's great news. They've demonstrated clearance of life-threatening viruses, and they're designed to clear tumor-derived EVs in their associated cargo. It's this very exciting opportunity. And here you can see they've got some potential therapeutic applications in cancer, life-threatening viral infections, and organ transplantation. Again, I can tell you, as someone who goes through regular treatments, this technology is very, very exciting. And we're looking forward to more of what's coming from Aethlon Medical. They've got $8 million in cash as of the end of last year, no debt, which is incredible. Approximately 2.6 million shares outstanding, suggesting the stock could be squeezed higher in a big way. Again, check them out on the NASDAQ under symbol AEMD. And here's the news that we see is driving buyers into the stock, as they just had positive data from an in vitro binding study it implemented of the potential for Hemopurifier to remove EVs directly from plasma of cancer patients. And why that's such a big deal is it's very simple. The data from the study is a critical element enabling the company to move the Hemopurifier forward in clinical oncology studies toward potential regulatory approval and commercialization. And looking at the stock price, which is trading right around 44 cents a share as the time we record this, giving you potential big upside. I'm going to show you again. Let's take a look at where the big players are buying the stock and how it could jump 37% very, very quickly. Let's take a look, because over the last 30 days, you can see the stock came down into the supply zone. And what happened is buyers have been stepping in here. Now, in the previous slide we looked at earlier, you noted on a 6-month basis, the volume profile line was there, suggesting most of the shares were bought here. Well, look at this over the last 30 days. This is where buyers are at. They're putting a floor underneath the stock, making the next upside move to 60 cents a share. And of course, at 44 cents, it makes this easy. The big potential return for the risk. This is incredible. And you can see here, zooming in on the 30-day chart, what do we note here, or the 10-day chart? This one, you draw that volume profile line across, you see very clearly buyers coming in here at every opportunity and looking to push this stock higher. You can see it jump quickly to 52 cents. We think the next big move is upwards of 60 cents. That would make a 37% return and a huge opportunity in Aethlon Medical for you. And as always, with any company we feature on the show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.